Hey guys, good morning, it's Tony. So, I constantly get asked, hey, what's the easiest way to invest? How do you grow your long term? How do you pick stocks that are going to keep going up, or going to go up? And it's it's extremely easy. And, a lot of people don't seem to, realize how simple and easy it is to pick winning stocks. And there's really only one thing that I go by, right? And I'll quote something else that one of my, I don't want to say mentor, but somebody that I know personally that has done extremely well. Obviously he's private, right? He doesn't have a YouTube channel or anything, but he's a very reputable programmer. I've known him for a while. He's been a friend of mine ever since like college, and he's grown his portfolio from like 15, I think like 20, 50K to upwards of a couple million, right? And it's all been on dollar cost averaging and just, putting all of his money into the correct spots and growing that over time, right? He's done extremely well over the last couple of years. But it's super easy. And it goes back to a book I read in college called The Common Sense Theory, and it was based off of economics and macroeconomics. And the common sense theory essentially just goes with, it's a couple of questions, and it's like, hey, is this company the number one company if they're in their category, right? And if they are, spread that out into the next 3 months, 6 months, year, 5 years, 10 years. Do you think that this company is going to stay number one in the respective sector for the next 3 months, 6 months, 1 year, 2.5 years, 5 years, right? That's generally what the common sense. Really, the easiest way of going about this that I found is, it's gonna sound super simple, but if you see the chart going to the top right side, that's your general indication of this is a good stock. So, the easiest way that I can explain this is, let's look at a random company like Adobe, right? Adobe, I don't have a position. My position is a dollar in this. But let's look at Adobe, right? What does a 5 year look like? Are they the number one player in their respective category? Yes, Adobe. They got Photoshop. They have Illustrator. They have video software, whatever, right? What does their 5 year look like? Up. What does their year look like? Up. Cool. You buy. That's it. That's literally it. Let's look at another ticker, right? Let's look at PayPal, right? 5 year, up. 1 year, up. Cool. This is an immediate buy. And if it goes down, you just keep buying, right? Let's look at another company, right? Let's look at Square, a relatively newer company, right? What does a 5 year look like? Up. What does a year look like? Up. It's an immediate buy, right? This is how you grow your long term. You don't do any TA. You don't do any research. The chart gives you the research. The chart gives you exactly what you're looking for, right? Let's look at Shopify. 5 year, up. Let's look at the year, up. You start buying Shopify, right? Are they the number one player in e-commerce? Yes, they are, apart from Amazon, but that's in a different category, right? Let's go with Trade Desk. Look at the 5 year, up. Look at the year, kind of sideways trading. It's only up about 15%, which is still relatively good. I personally like Trade Desk, so I would keep buying Trade Desk. I think Trade Desk is actually really good. Again, let's look at Fiverr. 5 year. It actually IPO'd in 2019, mid 2019, up. For the year, sideways. I actually like Fiverr, so I would put my money into Fiverr and would keep putting money into it. Keep in mind, this is long term. This is not something that you're going to be trading. This is not something that you're going to be looking at every single day. This is something that you're going to be adding consistently to, weekly, monthly, bi-monthly, bi-yearly, whatever, right? But this is how to grow a long-term portfolio, right? Look at Lemonade, 5 year, or since that IPO'd, what? 2020, let's look at the year, sideways. I would not buy Lemonade, right? It's been already out for a year. It already had a peak and it came right back down. Yeah, it might be support, but it also might be resistance and it might shoot back down. So no, I would not buy Lemonade. Why? Because the 5 year, it hasn't been trading that long and the year is sideways, right? What you're looking for is consistent upward momentum or upward movement, crowd. 5 year up, year up. This is an immediate buy, 100% buy for me. 100% addition to the long-term portfolio. Let's look at something random. Pinterest, right? 5 year, or since IPO, it's relatively up. On the 1 year, it's trading sideways. I would actually buy Pinterest because I know that there's a lot of, mostly women, right? So my mom uses it, my wife uses it, every single girl that I know uses it. So I would 100% buy Pinterest in a heartbeat, right? For the most part, since IPO, it is up a pretty decent amount, right? It's up over, like 200%. And then for the year, sideways, because I like Pinterest, because I like the way that they run their business, and because I see it everywhere, I would 100% buy Pinterest. Again, this doesn't fall under the common sense theory where you have to have the 5 year, the 1 year chart up, and then it has to be the number one player in that specific category. But again, I would buy it because I know personally, I already did my research, and I know that it's being used a lot, right? Etsy, again, 5 year up, the year up, immediate buy for me. Etsy would be an immediate buy. Let's go with something like Airbnb, right? 5 year, or since it IPO'd, it's just been trading sideways. I like Airbnb, but it's just been trading sideways. Ideally, I would possibly only buy it if it goes back down to maybe like 150, somewhere around this area, because it hasn't seen a lot of growth in the last year. I get that the whole pandemic happened and everything, but again, you're looking for a super easy, like, common sense place, right? You're not looking for something that you're gonna think about too much. Let's look at Dash. 5 year. Oh, it actually just IPO'd. So the 1 year, sideways trading. So this one, normally I would say I would not get into this, but I personally use DoorDash. I think it's great. It saves me a lot of trouble to driving somewhere, picking stuff up, and bringing it back home as far as food goes. So this one I would definitely buy. But again, that's after, I did my own research of, hey, it's a good company. I buy it. I have a lot of friends and family that use it. So I'm going to throw a little bit of money into this and have it be like a speculative play. Uber, 5 year, sideways, year, sideways. I would not buy Uber, right? I don't use Uber. I don't use Uber. I don't want to say that I don't like it, but I just don't use it, right? Let's look at Disney. 5 year up, 1 year up. I'm just telling you guys, I'm just giving you guys examples of how easy it is to actually, invest long term. It's super common sense. Look at the 5 year. If it's up, great, check 1. Look at the 1 year. Is it up? Great, check 2. Is it respectively in the top 1, top 3 of its sector? Disney, yes. It has no competitors, right? It might have a Netflix competitor from their streaming platform, but as far as Disney goes, nobody competes in movies. Nobody competes in theme parks. It's literally this simple and this easy to grow your long term, and all you're doing is consistently adding to these couple of tickers that you pick over just looking at this. I looked at this for 5 minutes, and I can guarantee you that this in 5 years, more than likely, there's a really good chance that it'll double or triple. I'll tell you guys that right now, or at least consistently grow. And it's something that you don't have to look at every single day. You don't have to trade. It's just a very, very, very easy and simple way of adding to your long-term portfolio and growing it long-term. So I hope this helps you guys out. Super basic explanation. It's not hard at all. It really, really, really isn't. And I feel like people want to get their money so fast that they oversee like the very simple and easy steps to make money. And they're like, oh, I want $1 million tomorrow. And 99% of the time, they lose all their money trading and stuff. Where, you should really focus on first starting at least a long-term portfolio. And then if you have extra money, then you can start trading. So just letting you guys know, have a great day. I'll see you guys later. Bye-bye.